Hey everyone, and welcome to the Crypto Critique, where we take a critical look at all things crypto. My name is Daniel. So happy you could join us today. I just wanted to say I'm super excited about all of the things that are happening in the crypto space right now. New developments, new things to discover, new projects taking off, old projects that are, now finally getting the recognition they deserve. And we're going to be taking a critical look at, all of these things. So, in this first episode of the Crypto Critique, I would like to talk about these $80,000 call options that expire by the 30th of April that, people have been talking about lately. Um, so, the other day, while I was like going through my daily dose of crypto news, I came across these two articles on CoinDesk and Cointelegraph. So here on Cointelegraph, you have the article by Samuel Hague, Options Traders Target 80K by May. Options traders are betting big that Bitcoin will be above $80,000 on April 30th, but analytics provider Skew thinks there is a 94% chance their positions will be worthless. Coinbase, yada, yada, yada. Here we go. On March 24th, the founders of crypto analytics firm Glassnode tweeted data suggesting that options traders on peer to peer crypto derivatives exchange Deribit are loading up on contracts set to expire on April 30th with a strike price of $80,000. So then on Coindesk, right, we got an article that is in a similar vein. Bitcoin options traders position for gains to 80K in historically bullish April. Theoretically, the 80,000 call represents a bet that Bitcoin would settle above that level on April 30th. Right? So those articles are both in the same vein, and it kind of got me to thinking Bitcoin to 80K by 1st of May. How realistic is that? TLDR, it's not very realistic. Because, well, those predictions, they tend to extrapolate from historic price action, but they don't really take market capitalization into account. And they also don't take into account diminishing returns on capital inflow, right? So if we want to take a look at this, we're going to have to look at some key concepts that, are part of this. And the first key concept we need to take a look at is the difference between price and market capitalization. And the second key concept we need to take a look at is the influence that market cap has on diminishing returns. Now, um, price is the dollar value of an asset as determined by the market, right? So if we all sort of decide that Bitcoin is $50,000 and that's what we're willing to pay for it, well, then that's the price that the market has set for Bitcoin. Market cap, on the other hand, is the dollar worth of all assets of that type, right? So if there were let's say if there were 100 Bitcoin in circulation and they were all worth $50,000, well, then the market cap of the entire Bitcoin supply would be $5 million, right? That's also how you calculate market supply. You multiply price by the total supply, right? So then market cap influence on diminishing returns, well, as the price of an asset increases, the amount of capital required for that increase doesn't change, but the returns diminish relative to the amount of capital inflow, right? So the way that you need to look at this is that uh, for Bitcoin to go from 5,000 to $10,000, it requires the same amount of capital inflow, right, in dollar terms that we put in to get from 5,000 to 10,000 as it would do from 10,000 to 15,000, right? Because we're increasing the value by 5,000 in both instances. So it requires the same amount of capital inflow. But as we're moving from 5,000 to 10,000 in the price, we're doubling the value. We're going 100% up in value. Whereas if we're going from 10,000 to 15,000, we're only increasing the value by 50%, right? So the amount of capital that needs to flow in for that increase in price to happen, that's the same, but the upside is reduced by 50%, right? So let's take, excuse me, um, let's take a look at how that would work with the present situation, right? So on April 3rd, 2021, Bitcoin's price was $59,000, more or less, on CoinMarketCap anyway, right? There's different exchanges all over the world, and the price of that varies. But according to CoinMarketCap, the price on April 3rd was around $59,000. Now, at that point in time, the total supply of Bitcoin was 18,672,456. Sorry, I need a sheet off the screen there. Which means that multiply price times total supply, well, that means we get roughly a market cap of 1.1 trillion, right? So that would be the market cap on April 3rd, 2021. So if we want to get to a price of $80,000 by May 1st, the total supply of Bitcoin in that time increases by about 25,000 Bitcoin, right? Bitcoin is mined right now after the latest halving at around 900 Bitcoin per day. So times 28, we get to about 25,000 Bitcoin extra that will flow into the market over the next 28 days. Right, so that gives us a total supply of Bitcoin of 18,697,656, right? Roundabout. So again, we multiply price times total supply and we get to a market cap of 1.495 trillion, or let's say roughly $1.5 trillion worth of market cap by the 1st of May for an $80,000 Bitcoin. Well, that means that the required inflow of capital over those 4 weeks would have to be roughly $394 billion. So, what needs to happen for that 80K Bitcoin scenario to play out? Well, we need roughly $400 billion worth of capital to flow into the market. To put that in perspective, $400 billion worth of capital inflow is roughly the equivalent to, well, Walmart or MasterCard, right? So that's kind of what we're talking about here, is that we need to add roughly the value of Walmart or MasterCard to Bitcoin in the next 28 days. So what does that actually mean to add that much value in such a short time? Well, Elon Musk of Tesla announced on February 8th that Tesla had bought $1.5 billion worth of Bitcoin. And I think that was pretty much the biggest singular Bitcoin buy in the current bull market. Don't quote me on that, but I think that's accurate. Um, Now, yeah, that news caused the price to jump by like 17%, and Bitcoin went to an all-time high. But to put that in perspective, right, it means that we would need 263 Bitcoin buys of Tesla magnitude to get to around $400 billion worth of capital inflow. Or to put it in another way, we would need 9 Bitcoin buys of Tesla magnitude per day for 28 days. Now, you might ask, it happened before, why can't it happen again? Well, in order to answer that, let's head into TradingView. So we're in TradingView, and we are right now looking at the weekly chart for Bitcoin plotted against USD Tether on Binance Exchange, right? And we're looking at sort of, it starts here August 2017, goes all the way up to, well, where we are at last week is 29th of March, right? That was the close of the week. So what we have here, right, you can see all these candles, and they're basically plotting like what happened with Bitcoin over the last couple of years. Um, so this blue line here, this blue line is the 21-week exponential moving average, right? And what it has sort of proven historically is that it is the bull market support. So what does that mean? It means that basically, as long as these candles are above this blue line, we're generally in a bull market for Bitcoin. And when we are below this blue line, we are generally in a bear market for Bitcoin. We can just also sort of see that here, right? We had that big bull run at the end of 2017. Then we went through that entire nasty crypto winter from 2018 all the way up to uh, Q1 of 2019, right? That was not fun. Right, so we got a bit of a recovery here, and then it slipped back down, right? We had this like correction and like all of this, and then we thought here that things were going to get better, and then bam, we had that like what was it? That 50% crash in the beginning of March of 2020, right? That was crazy, but in a way, right, that just sort of kicked off the present bull run. And what we can sort of see here is that starting like the 5th of October here, right, early October, Bitcoin has been sort of consistently above that blue line, which means that since October 5th, we have been in a bull market for Bitcoin uninterrupted. Okay, so the reason we're here is we're trying to figure out why it's so difficult for this kind of capital inflow to happen again. And well, the primary reason for that is movement to the downside and movement to the upside, right? So here on the 14th, in the week of 14th December, right, we broke 20K on Bitcoin, and that was a huge day because we broke the previous all-time high, right? That was sort of the like the ceiling that Bitcoin had trouble breaking through. And at that point, right, the the downside, the downside to the 21-week EMA would have been about 25%, right? Whereas the upside, right, in that sort of 20K to 40K movement would have been obviously 100%. And we would have done that here, let's see, 40K in 8 weeks, right? So the downside, had we put in $10,000 into Bitcoin at that point in time, had the price of Bitcoin fallen below the 21-week EMA, we would have said, okay, fine, we cut our losses, we get out, and then we would have come out with $7,500, right? 10K in, 25% loss, 7,500 out. But the upside would have been that we would have turned our 10K into 20K, right? That would have been the upside. So that's a risk that as an investor you're willing to take. But that movement from 20K to 40K, that required around $400 billion worth of capital inflow. Right? Now, if you go from from 40K to 60K, right, which is again $400 billion worth of capital inflow from 40K to from 40K to 60K, which, well, technically we haven't hit yet, right? At least not on a closing wick. But that would have been, let's say we hit that, right? 7 weeks, that would have been a 50% upside as opposed to a 30% downside. So again, that's a risk that you might be willing to take. Again, same amount of capital inflow, but your reward is your reward projection is worse, and your possible loss is greater, right? Like your loss from 20K to 40K would have been, let's say, 25%. Now we're at 30%. Um, but your prospective wins would have been cut from 100% to 50%. Right? And this is exactly why that move from 60K to 80K becomes so difficult. Because if we are here at 60K, right, let's imagine we are there for a second. And the downside right now to the 21-week EMA is 33%, right? So that's 1/3. So whatever money we put in, we would stand to lose 1/3 of that if our investment wouldn't work out. But if we go from 60K to 80K, and remember, we're trying to do this in 4 weeks, from 60K roughly to 80K, and that means we're going all the way up here in 4 weeks. Right, so the upside is 34%. So the upside doesn't really outweigh the downside, right? The potential gains don't really outweigh the risk. So raising that kind of capital again, well, that becomes a lot more difficult. Which brings us back to our original question, Bitcoin to 80K by the 1st of May. How realistic is that? Well, it's not very realistic. And it's not very realistic because $400 billion in extra capital inflow that's quite a big ask. And it's only been done in 28 days or less once, which was a movement from 32K to 52K, which just so happened to coincide with the $1.5 billion investment from Elon Musk. Right? You could make the argument that if that doesn't happen, well, then possibly that price movement also doesn't happen, right? And well, quite simply put, the potential upside does not outweigh the downside. So could it happen? Absolutely. I mean, right, for all I know, Warren Buffett wakes up tomorrow morning, says, man, I've been wrong about Bitcoin the entire time. I'm going to take $10 billion and, buy myself some Bitcoin. Or, if we're even luckier, Elon Musk goes, you know what, that 600 billion market cap of Tesla, why don't I just take 10% of that and stick it into Bitcoin? Well, that's a 60 billion market injection right there from, one of the biggest companies in the world right now, with one of the biggest social media presences. Don't underestimate that, right? So yeah, sure, of course it could happen, right? But that's not really the point. The point is that before you invest in Bitcoin now, you really should ask yourself, how realistic is it that Tesla type buys of Bitcoin are going to occur 9 times a day for the next 28 days? How realistic is it that the total value of companies like Walmart or MasterCard can be added to the market cap of Bitcoin in that time span? And how realistic is it that the same amount of capital can be raised for diminishing returns? So, this was the first ever episode of the Crypto Critique. I had fun making it. I hope you had fun watching it. The intent is to bring you this kind of content on a regular basis, probably about once a week or so. Um, if you like the content, please like and subscribe down below. Same goes for links to resources, stuff like that. Um, and remember, there's a lot of information out there, so stay critical. See you next time.